Coming up on Business Incorporated. AFDB approves $530 million electricity project to expand renewable energy and regional connectivity in Angola. And Morocco's economy projected to grow 4.5% in 2021. And Egypt and UN signed a protocol supporting Sustainable Development Goals financing strategy. Hello, welcome to the program. I'm Ladi Williams. Let's get the show started with intraday market numbers, which were negative here on the African continent. Nigeria's index resumed its bearish run, was down 0.15%, while the GSC in South Africa was 0.06% lower. The EGX30 in Egypt declined 0.20%, and Kenya closed positive on Tuesday. Investors in the Middle East sold off stocks in the Middle East at intraday. In the UAE, Dubai's index shaved off almost 1%, while Abu Dhabi's index fell 0.16%. Elsewhere in the region, Saudi Arabia's market declined 0.62%, while the Qatari index was down by 0.5%. And European stocks were slightly lower this morning as global investors awaited the outcome from the latest meeting of the Federal Reserve. Conrad is here to make sense of it all. Hello, Conrad. Good to have you.
Good afternoon, Ladi.
Good afternoon. So markets in Europe are on hold somewhat as traders are awaiting today's decision by the U.S. Federal Reserve on interest rates. What's being expected?
Well, in terms of interest rates, it's expected that the Federal Reserve will leave the key interest rate in the United States between 0 and 0.25%, so no change. In terms of the monthly quantitative easing, the monthly asset purchases, the amount is expected to stay at $120 billion a month. So that said, of course, what everyone on the market is now focusing on is what does Jerome Powell, the Fed chairman, have to say about the economy? How optimistic will he be? Of course, the economy in the US is expected to get a significant boost by this $1.9 trillion US stimulus package that President Joe Biden just passed through Congress. The question is, will the boost be so strong that the Fed starts to be concerned or starts thinking about inflation? If so, the Fed might be inclined in the future to tighten the monetary policy a little bit. This is the question that is on everyone's minds right now, which is, of course, hotly discussed already on the trading floors, anticipating the Fed decision and the statements by the Fed chairman.
I can imagine. We'll be tracking that to see how it goes. But Uber has agreed to classify its drivers in the UK as workers entitled to benefits. What does this mean for the rest of Europe, where millions of people work in the gig economy?
Yes, millions work in the gig economy in Europe, 24 million people at least, and for 3 million of them, the gig economy job they have is the only source of income. So it's really significant for Europe. The European Union has promised to deliver a framework for how gig economy jobs should be regulated. And in a number of court cases all over Europe, judges have been pretty unwilling to grant the companies, and not only ride-hailing services, also food delivery services, to grant them significant changes, compared to how employees have to be treated normally. The fact that Uber in the UK now has accepted this compromise is, of course, giving the whole discussion new spin. The question is always, how dependent are workers from the company that provides them with jobs? And another question has become more and more important and is becoming more contentious, and this is, when are gig workers actually at work? When they log into the app, or when they are actually driving around passengers or goods? This is a question not solved with today's news about the compromise in the UK, and this is why this topic is going to remain a hot one.
Okay, so after Volkswagen, the German car maker came out with its annual report and outlook, but what's in it and how's the market reacting to it?
The market reaction is very positive. BMW's shares are up. They have risen to the highest level in 2.5 years today. And that's because BMW has made quite bold announcements. It says that by the year 2030, it expects half of its sales to be zero-emission vehicles. That's a bit less ambitious than what Volkswagen said, but still strong accelerations. It would mean that in the coming years, every year until the year 2025, BMW will post an increase in sales of electric cars by 50% each year. Now, another topic was tackled at the press conference, the question whether or not BMW plans to sell its share in the car-sharing service ShareNow. BMW says no comment, but still the fact that this was talked about at the press conference was enough for people on the trading floors to speculate about it. And this is giving investors another reason today to be interested in the share.
Exactly. News is always a market mover. Anyway, Conrad, thank you so much. Always good to talk to you. And the financial markets are edgy today as investors await to hear from the U.S. Central Bank tonight. Let's see how markets are reacting in the UK with Juliana now. Hello, Juliana. Great to have you. All eyes are on the U.S. Federal Reserve decision coming up 6 p.m. UK time. How are the markets reacting at intraday?
Well, the FTSE, Laddie, started off in the red, and it's firmly in the red at intraday, as you've been discussing with Conrad. All global markets are waiting to see what Jerome Powell has to say about interest rates. There's been a massive global anxiety attack about what's happening with the rise of inflation, and not just in America because of that 1.92 trillion stimulus package by Joe Biden. But we've also got the same issues here. There's so much pent-up demand. Interest rates are at a historic low at the moment, and once people start spending, will it go up? That's the big question, so we'll all have to wait and see. The FTSE All Share is down 0.33%. The FTSE 100 also down at 0.26%, and the FTSE 250 down again at 0.59%. In currencies, the British pound is up against the US dollar by 0.05%, down against the euro by 0.01%, and up against the Japanese yen by 0.13%.
Okay, I see the pound is beginning to recover well. It seems there's an update with the Uber situation. The union, which took Uber to court, is saying they will continue the litigation. Why is that?
Yeah, this is an interesting twist to the David versus Goliath story. We all know what happens at the end, which is why 70,000 Uber drivers across the UK will be receiving a minimum wage, at least of £8.71. Now, it's important to state the amount because Uber have said that some riders receive about £17 an hour when they're in London, and they receive £14 an hour when they're driving outside London. But this Supreme Court ruling would make them receive a minimum of £8.71 an hour. Now, two drivers, James Farah and Yassim Aslam, they were the two leaders of this tribunal. They've been looking at the detail, and they do believe that Uber have jumped into a few loopholes when it comes to how they've rolled out the ruling by the Supreme Court. And basically, so when a driver is sitting in the car, they will not be deemed as working. And the problem with that is that some drivers say they can wait for hours upon hours on end for some people. As we all know, I'm sure we've all made some of these ride-hailing apps wait for us before. And so with this new ruling today, they'll only be receiving pay when a passenger is in the car. That's not good enough for some union bosses. They've said in a short statement that we've got, Uber drivers will be still shortchanged to the tune of 40 to 50%. This is not acceptable for Uber to unilaterally decide the driver expense based in calculating minimum wage. As you can imagine, this is a massive story here in the UK, seen as a win for Uber drivers. Lots of Uber execs have been speaking to British media. The Northern and Eastern Europe boss have said that most of the drivers they've spoken to are happy, the tens of thousands that they've spoken to, and that if we decided that logged on time on the app was also working time, that would mean that we would need to introduce shifts, telling drivers when they can work and when they can't work. And the fact that you're in the gig economy, you enjoy that flexibility. So this case is expected to continue.
Very interesting twist there, I must say. But research by ISA provider Scottish Friendly and the Centre for Economics and Business Research found that Britons are planning to use a hefty chunk of savings built over the past year to go on a £50 billion spending spree once restrictions are lifted. Is that a sentiment you're getting there in London?
Yes and no. It's so difficult to speak to people because we're in a lockdown. Unless you follow all your news on Twitter,
Exactly.
you can hardly find out what people are thinking. But according to the Bank of England, this is massively over-exaggerated. I believe I discussed this with you on Monday, Andrew Bailey, when he was speaking. He believes that there is, of course, billions of pounds in people's savings that they haven't been able to spend because of restrictions. And there will be some sort of spree, but only 5%. I believe this research says it's going to be up to 25%. In a way, this is positive. Of course, every economy that's been locked down wants people to go out and spend because you want the economy to start ticking. But these are some of the fears that investors are having across the world with the rise of inflation. In the UK at the moment, it's 0.6%. The Bank of England target is 2%. There are fears that with so much spending, it could rise to about 5 or 6%.
All right, seems we lost Juliana there. Anyway, we'll get back to that. But Asia-Pacific markets traded mixed today as investors wait for the outcome of the U.S. Federal Reserve two-day policy meeting later in the day. Australia shares caught back some of their earlier losses as the ASX 200 closed down 0.47% at 6,795. The Nikkei 225 in Japan finished near flat at 29,914 index points, while the Topix index rose 0.13% to 1,984. South Korea's Kospi slid 0.64% to 3,047, while Hong Kong's Hang Seng index retraced earlier gains to trade near flat in late afternoon trade. Chinese mainland shares were mixed. The Shanghai Composite was near flat at 3,445, but Shenzhen Component rose 1.22% to 13,809. And U.S. stock futures barely budged early today as investors await the outcome from the Federal Reserve's two-day policy meeting and comments from the Fed Chair Jerome Powell later in the day. Dow Jones Industrial Average futures pointed to an opening gain of about 25 points. Both S&P 500 futures and NASDAQ 100 futures traded negative. Investors would also hear from the Fed Chair, who is likely to rock the stock and bond market with his commentary, despite being unlikely to offer specifics. Treasury yields rose slightly on Tuesday during the first day of the Fed's meeting. The 10-year Treasury yield remains over 1.6% after hitting its highest level in a year last week. And oil prices were mixed in early trade today as concerns over rocky demand in Europe counterbalanced hopes of a recovery in U.S. refinery activity as industry showed U.S. crude stockpiles unexpectedly fell last week. Brent crude futures fell 0.1% to $68.32 a barrel, while U.S. West Texas Intermediate crude futures rose $64.84 a barrel after climbing as much as 28 cents in early trade. Benchmarks were choppy on Wednesday, with both swinging between positive and negative territory during Asian trade. The market has been drifting lower over the past few days as more European countries pause COVID-19 inoculations due to concerns over possible serious side effects which could slow recovery in the fuel demand. And gold prices edged earlier today to hover near their highest in more than 2 weeks on prospects of high inflation, although trade was range-bound as investors exercised caution ahead of the U.S. Federal Reserve's two-day policy meeting outcome. Spot gold was up 0.3% at $1,736 per ounce, while U.S. gold futures was up 0.3% at $1,735. Some investors view gold as a hedge against high inflation, and that could follow stimulus measures. But a resultant rise in Treasury yields tends to dull the appeal of a non-yielding commodity. In other metals, silver fell 0.2% to $25.90 an ounce. Palladium shed 0.3%, $2,490, having hit a one-year high of $2,520 on Tuesday. And platinum was down 0.4% to $1,207. And we'll bring you more stories across the continent when we return from this break. Do stay with us. And Kenya's health minister announced that the country is officially in its third wave of the COVID-19 outbreak. Following the announcement, President Uhuru Kenyatta extended a nationwide overnight COVID-19 curfew for 60 days as positive test rate hits 13% in March compared to January's 2%. Joining me now to talk about what this will mean for the economy is George Bordeaux, the Chief Executive Officer at Call Street Research and Analytics. Hello, George. Great to have you.
Hello, how are you?
So President Kenyatta announced new restriction measures to curb the spread of COVID-19 pandemic. Can you tell us about these new measures?
Yeah, so the president just a couple of days ago came up and said, made a couple of announcements around restrictions and movements. First is he banned political rallies. Remember that political rallies were beginning to pick up pace because obviously next 2022 is an election year, so there's a lot of political alignments. There are also a couple of by-elections that were happening, especially in the first quarter of this year, and that also triggered a lot of huge gatherings by politicians. And most of these gatherings, people were not observing the protocols. They were not wearing masks, they were not keeping distances. So the president essentially just said no more gatherings. The president also reinforced the curfew, which goes until 4 a.m., from 10 p.m. to 4 a.m. This curfew has always been in place. It's just that now the expectations that they will revise it downward, they will soften it, but now he extended by another 60 days. The good thing also is that the schools are closing this week, and so that should help a bit. The president also said that they're going to look into tightening more measures if these things continue together, because Kenya is experiencing a third wave, which is proving to be more deadly, number of deaths over the last 1 month. And so this has caused a bit of concern from that side.
Well, with the third wave of the pandemic in Kenya, what does it mean for economic recovery?
Well, the economic recovery was already looking anemic already as it is. The expectations was largely that a number of these easing measures would be done away with, essentially. There's still a ban on hospitality service. Restaurants can only open, well, they can allow dine-in guests, but they can only open up to 9 p.m. There was an expectation that restaurants can now be allowed to open, restaurants and pubs. They can now be open for an extended period of time. They can admit more dine-in guests. Now, this hasn't happened. And now from that side, still expects a lot of weaknesses on that side, the service sector generally, and specifically talking about the hospitality. Aside from the COVID, the impact on the service, we also have
All right, seems we lost George there. These things do happen. Anyway, let's move on now. The African Development Bank has committed $530 million to finance the construction of a central south transmission line that will connect the north and south transmission grids in Angola and allow for the distribution of clean energy between the two regions. North of Angola has a surplus of more than 1,000 megawatts of mostly renewable power, whereas the south relies on expensive diesel generators supported by government subsidies. Transmission capacity will increase by 2,250 megawatts and eliminate the need for polluting diesel power generators in the southern provinces. The project, once operational in 2023, will avert the consumption of 46.8 billion liters of diesel per year in the south, cutting 80 megatons of CO2 emissions. And Morocco's economy is projected to grow by 4.5% this year, and that's according to the African Development Bank. The FDB says Morocco's exports of automotive parts and phosphates and other derivatives have recorded an encouraging recovery level and will drive Morocco's economic growth in the coming months. However, the bank says Morocco's tourism sector will not recover as quickly as it expects Morocco's tourism sector to continue to face a COVID-19 induced crisis, citing a stagnant demand for hotels and restaurants. The forecast comes to reinforce the notion that tourism has been one of the hardest hit sectors in Morocco due to the closing of borders and other lockdown measures. All right, I think we have George now. Hello, George.
Yes, can you hear me?
Yeah, it seems we lost you there, but let's talk about businesses now. With the third wave and new restriction measures put in place, how much damage will this do to an already struggling business?
Well, I think the damage has already been done in the economy, and I think that the extension of this restriction measure would now just delay a possible recovery.
Oh, seems we lost George again. All right.
Hello, can you hear me?
Hello, George. Are you there?
Yes, I'm here.
Okay, you can continue with what you were saying.
Yeah, so I think that the extension of this restrictions in movement and business activity operating hours is, in my assessment, is just likely to delay any possible recovery, especially on the private sector side. And I've also mentioned that on the government side, the revenues, the fiscal trajectory, it's looking weak. We're projecting double-digit fiscal deficit, both in the current and fiscal year, although government officially is projecting 7.5% deficit, 7.5% of GDP in deficit. I think it's likely to achieve that. We have an IMF on board, which is likely to sign off about $2.7 billion worth of budgetary support to the government. It just shows you the government is also planning to go to the Eurobond market to refinance some of the previously issued debt. So it just shows you the impact it has on the public finances, complete disarray.
All right, George. Yeah, so we'll keep tracking that to see how it goes. Anyway, thank you so much for joining us today. Thank you for your time.
Thank you.
All right, and Egypt has signed a cooperation protocol with the United Nations Joint Sustainable Development Goals Fund for the draft strategy for financing SDGs in the country. The Minister of Economic Development says that the draft strategy for financing the SDGs in Egypt aims to support the ambitious development efforts that the country has set for itself. According to the minister, the joint cooperation between the ministry and the Joint Sustainable Development Goals Fund aims mainly to provide and determine the cost of achieving Egypt's Vision 2030. The main sectors identified for this joint program are education, health, social protection, water sanitation, and transportation. And that's it on Business Incorporated. Thank you for watching. I'm Ladi Williams. Bye for now.